Another big story we are following today is the Federal Reserve increasing those interest rates by 75 basis points. Those will impact a lot of Americans, and according to one expert I talked to, it will impact everyone, and it won't isolate from anyone else. So we're going to hear more on what it will impact on average Americans, including interest rates, including housing market, here on Live Now from Fox. So let's listen to this interview from just earlier today here. Federal Reserve will increase those interest rates by 75 basis points. And to get a little bit more understanding into what average Americans can see from the economy moving forward, we're joined now by John Milikowsky, certainly a financial expert in that regard. What can you tell us, and what was your reaction when you heard, for the third straight time, another 3/4 of a point going up in interest rates?
Well, that's a significant amount, right? It's, again, as you mentioned, the third time, and it's probably the largest rate hike ever. And so what this is really going to have an effect on, as we've seen already, it's affecting mortgages, and the refi market is basically non-existent at this point. In the end of the day, the Fed is trying to tame inflation, and how they do that is by slowing demand down, by increasing the prices of goods and services, by making it more expensive. And so these increases in the rates are costing companies more to produce products, and it's actually eating away at the household income, what they have left. And so they're already paying a lot for housing, and how much are they going to have to pay for gas, and gas prices being high. So it's really leaving the consumer with less money and ability to pay for other things.
And we've seen that the inflation, obviously, they're trying to tame that, like you said. That's a good word, tame, to do it. But they've also already done it 3 straight times, and they kind of hint at the fact that they're going to do it again. Are they maybe a little bit surprised that this isn't coming, the inflation isn't really impacted yet?
Yeah, I think the Fed is a little bit shocked that it hasn't come under control, because if you look at the historical inflation rates, and I was kind of looking at that today, March of 1980, inflation was at 14.6%, quite a bit. Today it's about 8.3%, which is fairly high. October 1990, 6.4%, when the stock market basically melted down. March of 2000, before the dot-com, or right around the dot-com bust, 3.8%. July of 2008, 5.5, and July 2008 was a big indicator in the market, because we had Lehman Brothers and a lot of financial companies that were basically dissolving. And so now that we're at 8.3, which is significantly higher than we were in 2008, I think the Fed is surprised that the rate hikes, and their significant rate hikes, have not had enough of an impact to slow down the demand. And I think that's so the Fed has promised to get inflation under control and bring it down to around 2%. So we'll see if that happens.
Yeah, definitely. And when you mentioned the year 2008, I think it concerned, it maybe not scare, but concerns a lot of people, because the short-term rates, 3 to 3.5, the highest since 2008. Does that concern you as well? Just the fact that we're alluding to some of these timeframes and dates that they're synonymous with recessions?
Yeah, I mean, historically, if you look back, every recession is different, right? There's a different cause for it. In 2008, it was the mortgages, and that they were some of them were not based on good quality assets, which affected the stock market, right? So what is it really today? I mean, we're coming out of coronavirus. 2019 was a pretty phenomenal year economically, and then we started to have some significant downturns with unemployment. So all of this it's a different breed of what's happened, but we're trying to determine, the least of Fed is, what is the right combination of changes, to affect, to slow down the economy. And it's different every time. So how they do that is it's unknown at this point, whether this is really going to work. But what we do know is that this is impacting families, right? I mean, so it's pricing certain people out of the market for homes. One interesting statistic that I saw is that home starts was pretty high. It's 1.57 million units for August. But if you compare that with the building permits, which plunged 10%. So what that means is some of these home builders have already locked in their rates for loans, right? And have already gotten their building permits, and they started to build, and they're already now committed to doing that. So they really, pulling out of that would cost a loss for them. But it does show that in the near future that we're going to be expecting some downturns in the construction industry, which affects so many different industries, right? Because if I were to buy a home, I'm going to be buying furnishings and appliances. And then to build a home, you need materials. So all of those industries that that support housing over time. Maybe not immediately, but within the next 2 or 3 quarters, we're going to see some significant downturns.
And the term I saw was shelter inflation, and I thought that was a term that I really haven't seen a ton of. And you mentioned about the housing market. You mentioned the construction also impacting that. What is shelter inflation? And like you said, can we expect maybe the Fed increase shelter inflation or decrease shelter inflation?
I feel like that's kind of a play on right when we had COVID, shelter in place, and I think what they're expecting is a significant effect on the economy. And again, it won't maybe not be today, it might be tomorrow, it might be 3 months from now, but basically brace, because they're expecting a significant impact to the economy, and which, by the way, could result in a high unemployment, right? Because if the cost of doing business is so significant that companies cannot afford, they're going to have to cut their margins or cut their expenses so they can keep their margins flat. I mean, we have in California, there's a proposal to increase the minimum wage for fast food workers to $22 an hour. All of these basically are a result of high inflation, because the cost of living is so high. So anything that affects the cost of living, whether it's food and for gasoline and transportation, all these things are going to drive up prices. And hopefully the Fed is expecting that it's going to drive down demand, which is really the ultimate goal.
Definitely, as they try to tame inflation. And Jerome Powell, obviously Fed chair, he said, quote, "Hope for the best, but plan for the worst." Is that a good synopsis of what's going on right now?
I would guess so, but I don't think it gives a lot of confidence to the market. And we've seen the stock market, take a beating. I'm not sure that's going to be a positive reaction by the market. And today we saw that after his presentation.
And what else can we expect from it? Because obviously you also mentioned jobs, and that's a big proponent of this, that they haven't seen necessarily as many jobs. And we saw it with President Biden in the 60 Minutes interview. It's talking about how unemployment rate is still so low. How does that maybe impact what the Fed is doing with the job and unemployment and stuff like that?
Well, I guess it gives the Fed some confidence that if the unemployment rate isn't so high, that maybe we can't afford to increase the federal rate, right? Which will then, if the economy can still afford to function and retain people to work, then it's not enough, right? If the economy is red hot and we're trying to slow it down. So I guess at some point that would be a really good statistic to look at. If the unemployment rate starts to really creep up and people are unemployed and we have high inflation, that's really a bad combination. People cannot afford the basic services and products to live. Then that might have to be a new policy decision.
Definitely. Thank you again, John. Are there any last words or anything else you could think of in regards that you want to get off your chest here in terms of what we saw from the Fed today and maybe what's to come from the economy or anything else financial related?
Well, I definitely think the stock market, again, if you have savings and you're relying upon that, you have a fixed income, especially if you're older, definitely want to shift on how you invest so that you don't lose some of your investment. But you can definitely see that this is going to affect everybody. I don't think anybody's going to be isolated from this.
Definitely, very sure of that. Thank you again, John. I know we're going to have much more to come here in terms of the economy, and as we saw the stock market kind of bounce around over the last few weeks here. So thank you again for joining us here on Live Now from Fox.
We want to thank John Milikowsky one more time as giving some insight into what average Americans can see in terms of interest rates as the Federal Reserve continues to bump them up. We're going to take a quick 2-minute break here on Live Now from Fox.